Hey, what's up, everybody? All right, so hopefully everybody's having a great weekend and everybody finished off the week strong because we did have a 4-day week. So today I just kind of want to explain to you guys how to create a watch list. Okay, we're going to look at a few things here. As you can see already, I already have it written down for you guys just so we can talk about these 4 points here, and we're going to just look at the market real quick, right? So number one, I do have account size. Number two, what is your comfort level of strategy? Emphasize on the your, because it's not about the guy next to you. It's not not about the one who's calling out a signal. It's not about the guy who became a millionaire from nothing. It's not the guy who, became super rich because of Bitcoin. It's none of that stuff. It is what's your comfort of strategy. Number three, after you figure these two out, that's when we go look for search sectors, looking through the sectors in the markets. And then four, we come up with a game plan and identify price action levels. And we're just gonna look at these 4 things, right? So you guys take some notes on this, and I hope this gives you a clear understanding of, how to take some basic steps into creating a watch list. Okay, now I know there's a lot more into it. And, probably people have like 10 different rules and guidelines that they go through and criteria and all this stuff. But at the end of the day, guys, try to keep it as simple as possible and don't overthink anything, because once you start overthinking something, then that becomes FOMO. It becomes wanting to chase something that you shouldn't be. It becomes oversizing on your positions when you shouldn't be. I mean, there's all types of things that follow through overthinking some things. And as you can see, my charts here are, clear of all clutter, meaning I don't have indicators. I don't have anything here that's going to tell me when to buy a stock. All I do is have price action, supply and demand, and that's it. Like, can I trade or can I scalp patterns? Of course. Okay, I can trade hype. I can trade all those things. I can trade the AMC trade, but the earnings, the IV, the day after earnings, the gaps, I mean, everything. But again, it falls down to what kind of comfort you have as a trader and how much discipline you are going to put into effect in order for you to keep on trading, right? So number one, account size. All right, I'm gonna give you an example. If you have $1,000 account, you're definitely not gonna go look at Amazon or Tesla. Okay, those contracts are very expensive, so you should not be looking at those tickers. If you have a $500 account, you're definitely not going to look at Amazon. You're not going to look at Google. You're not going to look at the tickers that cost a lot of money, because you're an options trader. If you're buying shares, then that's a different story. You can buy, as long as you can buy one share of that company that you like, then you should be okay and trade it that way, right? So that's account size. Okay, I'm not telling you guys, and I will never tell you guys to put a percentage limit on yourself, because if I tell you and I say only use 10% of your account only, right? So if I say this, use only 10% of your account only, but yet you are 100% comfortable knowing that that bull flag is going to go in your direction, or knowing that that support is going to hold, or knowing that that pre-market level is going to break, or knowing that that squeeze is going to pop in the next like 10 minutes or whatever it is, okay? If you are 100% comfortable, and I'm telling you to only do 10% of your account only, did I or did I not just put a limit on your potential of growth? The answer is yes, okay? I don't ever want to sit here and tell you not to go more than 10% of your account. I don't teach percentage. I don't teach the money aspect, because all that comes secondary. And in my page, it goes last. The first thing that I want to try to do is get my account size. I want my ticker to match. And I want my strategy to be 100% comfortable the minute that I enter and exit that specific play. Instead of doing 10%, what if I want to do 50? What if I want to do 60% of my account and capture the full move of that quality of a trade? Okay, that's when it comes down to the comfort level of that strategy that you are going to use. I don't care what strategy you use. I don't care if you have a million indicators and those million indicators point to a bullish move or to a bearish move, that you are 100% sure that it's going to happen. If you are 100% sure right here, okay, then go as heavy as you want, okay? get into a position that you are most comfortable with. Don't go in the position thinking that, oh, you're going to get rich within one trade, because that's not going to happen. Okay, I'm not saying that. I'm not saying you to go whole account something because you're 100% comfortable on a little bull flag, or on the oversold RSI, over the overbought RSI, or whatever it is. Okay, what I'm saying and what I'm pointing out is that it has to be your comfort level. Okay, everybody who deals with emotions, everybody looks at things in a different aspect, and the perspective and the lifestyle that we hold, it's different. So the comfort level is going to be different for everyone. Okay, number three, we're going to have to look for sectors. Okay, so sectors, things like the FANG stocks, the financials, the semis, the retail, the healthcare. You're going to look at some of those tickers and break them down and look at what fits your account size and what fits your level of comfort based on the strategy that you're using. Like I said, you can use the EMA cross, you can use the VWAP bounce, you can use the oversold RSI, the crossover of the stochastics, the MACD curling, I mean the divergence, the volume divergence, all kinds of stuff. Whatever it is, I don't care what it is, as long as you are 100% comfortable knowing that your account size matches the ticker, and that you can break down the sector and then come up with a game plan with identifying price action levels. Okay, so these four things, guys, I hope you guys understand that. We're gonna look at some tickers right now, and I'm gonna show you exactly what I'm gonna do. Right now, for me, what I'm gonna do is what I started this week is I'm gonna start with a $500 account, and I'm gonna keep on trading. So every watch list that you guys see moving forward, it's gonna be based off a $500 account. Okay, that's my personal thing. I don't care what you guys trade, but that's going to be the watch list that's going to be moving forward. And these are the tickers that I am going to choose, right? So what I'm going to do here is I'm going to look at the financials and show you guys how I break something down real quick. Okay, so financials first and foremost is going to be XLF. All right, number one, I always start on the weekly time frame. What do I see? All right, now I have some of these charted already and some of them I took off, right? So here's your pre-COVID. Here's your pre-COVID rejection. Here's the initial bounce, and then here's the initial break. Here is your retest of that initial break and the retest of a pre-COVID level. So we technically gave up a whole year's gains to come back down here and test this level from pre-COVID on XLF. Now, what I want to do is I want to look at the sum of the banks. So I'm going to look at JPM, and is the candle body something that I like? Is the level that it's at something that I like? If that fits my account size, then of course I'm going to put it on my watch list. Okay, so JPM, it looks like we kind of traded sideways. We have a huge buyer wick on the bottom, so I think if this breaks, we could come and see that gap there, come fill that gap, and then just continue on for a little run into the earnings, because the earnings is coming up soon. So this is on 7/14. So this is how I would look into JPM. Does it fit my account size on a $500 account? What I'm going to do is I'm now going to go to the option contract and check the first one, the first above one. So right now we're at 117.32. I want to check the first one. So the 118 and the 119. If you want to do two, that's fine. Can I buy this with 500 bucks? The answer is yes. Okay, so this is for a weekly contract. Now I'm going to go look at next week's. Can I buy this for 500 bucks? The answer is yes. Again, I'm not telling you guys that you can only use 10% of your account size. As long as you can buy it and the direction goes in your favor, then you should be good. Okay, so JPM is yes. I think it's a great ticker. So I think so far right now, the sector for financials is looking good. Let's go look at BAC. Where are we in BAC? It's almost the same thing that we just talked about. The difference here is that we're at a previous high, and then we're at the bottom of like that pre-COVID stuff, right? So when the pre-COVID hits, we were here, and then we gapped down right to that level, same level, and then we're right there at that same level again. We're at this previous high as well that we ended up breaking here, and then of course that COVID thing happened. So BAC is in the middle of a spot right now where it may determine its next direction, because again, what I just said about JPM and XLF, we basically gave up all last year's gains and we're coming back down here. So we're kind of in a good spot to look at the risk and reward. In BAC, it's a nice red candle. So I'm wondering if all the other financials are red. Now let's go see, okay? So BAC, it is something that I could buy. Everybody knows. If you don't know, then you do now. 0.7. I can even buy 3 weeks out if I wanted to. July 5th. It's only $1. So July 1st, July 1st are only $50. So you can buy like 5-10 of these with $500, right? So that's BAC. And then now I'm going to go look at MS, see if this has a red candle or a green candle. Okay, it has a green candle, and MS is a great company as well. Great bank, Morgan Stanley. And this one is like outperforming, I think, a lot of the banks too. I personally like MS, but it's kind of hard to trade. I've traded this before in the past, and the movement's a little bit different. So yes, green candle, and this is based on the 4-hour time frame that I had a little pattern on here. The next one is going to be C. C, if you guys don't know, Warren Buffett did invest in this specific company. Why? I have no idea, but whatever it is, Warren Buffett has a great name behind. His legacy is amazing. He's a great investor, and he bought C just a couple of months ago. He bought it, and I think it was like on one of these gap ups that he bought it right here, like 2 months ago or last month. But now it's currently right here with a nice red candle. The difference here is that we are at a support, at a demand. So we never came to gap fill. I'm not a big fan of this gap fill stuff. But we did have buyers showing up here. We do have this huge wick right here. So it looks like C wants to catch up, and it looks like C wants to run up into its earnings. So I like C and I like BAC. Let's go look at another one. WFC. WFC almost looks like it's in the middle of nowhere. The only reason why I don't like this is because it gave up a lot of this right here. So it tried to push up, but then it just gave everything up down here. And on the bottom, finally, it kind of just bounced in the middle of nowhere, which kind of sucks. So I don't like this one at all. What I do like is BAC and C. So we're going to look at BAC first because it's a smaller ticker. So we did look at the weekly time frame. Oh, that was BA. All right, so let's go look. Why is this behind? And let's go look at the 4-hour. So it's behind. Every other financial got bought up except for this one. But what I like to look at is the level that we were at. We're basically underneath a weekly level. Okay, and what I like is that it held. Okay, it did have a green day, but it didn't have a green week, which is okay. It's not a big deal. I think the volume for financials came in strong on Friday. Something I did not know, they had a stress test, which if you guys don't know anything about it, please search it. It's called the stress test for banks. Search it out. It was actually real good news, and I didn't even realize that on Friday, but they did come out on Friday, and every financial had a solid green day. I think the market in general had an amazing green day. BAC is a smaller ticker. If you have a $500 account, this is perfect size. And it's perfect because it's the one that's a little bit behind all the rest of the financials. Okay, we're going to look at BAC and C. All right, so I'm going to go back to what we said here. Account size, $500 account. Like I said, that's what I'm going to be trading. Account size must match your account size buying power. Does it match? The answer is yes. What is your comfort level of strategy? Search the sectors. We're going to look for the financials, and we're going to have a game plan now, identifying price action levels. The comfort level for me is going to be looking for something that's a little bit behind, and I'm looking for a bullish setup. That's what I'm looking for, and that's the only thing that I'm really going to plan for, because if I have a $500 account, I need to stay disciplined. I need to know what I'm looking for, and I need to know exactly where I want to enter and exit this specific ticker. Okay, so we just broke it down. We said that all the tickers were green and a lot of buying pressure on the bottom, and BAC is a little bit behind from all the other banks. Okay, so what we do have here is this nice little trend line. It looks like we did reject. We have some candle bodies here that we need to break. So my entry for a long position is going to be here on a breakout. Okay, so that 32.65, 32.64, 32.63, 62.60, whatever it is, anywhere inside here, I am going to go long. My first target is going to be here, so that 33.30. From there, it looks like we have, let's go see. All right, looks like we have this little piece here, but this little piece kind of matches this one and then this one. So that's going to be the high target 33.50. Okay, so we're going to do that 33.50. So that's 40. All right, let's do 50. All right, that's it. 33.40 to 33.50 on the break of 32.60 level. Okay, that's my entry point. Now it doesn't have to happen Monday, doesn't have to happen Tuesday. This can happen Wednesday, Thursday, or Friday. Whatever day it decides to do that. This is the level that it's going to change price action. And what I mean by that is that the rejection will no longer be there, but the price action to go bullish will come and overtake it. Therefore, by the time that it does that, you're going into that next supply. So that little baby supply there, that little rejection that you see, that's what it is. Now, BAC can have a bigger move. So I want to look for more structure. So I'm going to grab this candle body right here. You see this one right here, that 34.76. Here's your rejection. Here's the bounce. And then I want to look for a bottom, but it doesn't really have one. So I'm going to grab just this piece right here. 34.30. Okay. What I'm really aiming for is top piece here, just because there's not a lot of resistance and it looks like it just like flushed all the way down like it was the thing to do. So if the price action changes here, what I'm saying is that it's no longer going to be bearish and the price action is going to change to bullish. So the bullish setup, the momentum is going to drive it up here and then up here. At this point, I'm going to look for a staircase pattern. The staircase pattern that's going to probably look like this. Boom. That's what I'm looking for, okay? A nice little staircase pattern. All right, so hopefully you guys got that. Hopefully you understand. If you make money off of it, let me know in the comments down below. If you don't make money off of it, at least you took it for an educational video, right? All right, so that's BAC. Now let's go check out C. What I like about C is that it had a huge green candle, right? But after every huge green candle, it's always followed by a nice red one. Okay, no matter what happens, it's always followed by a red one. Maybe that's the only red one that we're going to get, but who knows, right? I don't know what it's going to look like pre-market. But this ticker here, what I want to do is I want to do something a little bit different. I want to get a dip buy opportunity for this one specifically. The dip buy, the reason for that is because if we don't go bullish Monday, we're definitely not going to break this 48. Okay, so this 48, I want to go long. Okay, at 48, I think it'll break this huge range. But I want to catch a dip. So I want to look for the next structure of candle bodies, and it's like right here. This is where I want to buy the dip. My stop loss will be right here. Very simple. So what I'm doing initially here is I'm grabbing this huge move and I'm grabbing 50%. Once it drops 50%, that's going to be that red candle. And then this is where the buyers who got in here, these buyers who got in here are going to take control. So if they don't take control, at least my stop loss will be tight. So I want to get a dip buy on Monday with the red market and not an aggressive red market. I want to get a nice red market with this ticker dropping down a bit for only to see the buyers show up at the bottom. And that's the dip buy that I want. Now, if market goes crazy bullish, then for sure I will enter over that 48 and just ride it all the way to that 49. These tickers, C and BAC, I want to trail every 50 cents. Okay, so as long as it moves 50 cents, I'm trailing it. So if it goes from 48 to 48.50, I'm automatically trailing. From 48.50 to 49, I'm automatically trailing again. That's how I want to treat these small tickers and buy multiple contracts so I can be able to scale out with my $500 accounts and go about my day. All right, so that's BAC and C. And then we're just going to look at JPM just because it's a great one as well. All right, so this one, the difference with this one is that it had a base. Okay, so this thing had all this resistance right here, all the supply, and it finally broke inside. So if this thing can just hold anything over 116 through like 117, even as high as 117.81, a lot of people are going to try to play this gap right here. Okay, so keep that in mind. Retail crew will come in wrecking these little gap fills. So if market goes bullish, you guys can see I already have my alerts there. I want to try to get a dip buy entry at 116. Anything below 116, I will stop out real fast, depending on what the market is going to look like. Again, I'm planning for the bullish setups, okay? Because I think financials are at great spots and the risk to reward is just amazing. Like the fact that we accumulated on a lot of the financials and that the stress test on Friday was actually very positive. So financials have been getting some positive news recently in the past couple of months. The only difference now is that we are in the bear market still. So that's what makes it a little more difficult in order for us to even capture a good bullish move, because every bullish setup gets smacked down and becomes bearish right away. Okay. So that's what we're going to look at. We're going to look for the dip buy at 116, depending on how the market is tomorrow. I don't know what the pre-market levels are going to be. Okay. Anything over 116, I want to enter just somewhere in here, depending on where the pre-market levels are going to be at open. And of course, I will adjust in the morning. So the break above the pre-market level, let's just say we open here, break above, or the dip buy on the pre-market level will be here. Well, whichever one comes first, okay? If you guys don't know how to use it, look up the video day trading strategies, and you guys will definitely find it, okay? So that's going to be JPM. So for XLF, I have to watch the ETF. The ETF is what gives that sentiment for financials. So I'm just going to make sure that this stays green. We hold 50% of that. So right here, this 32, 31.90 to 32. I want to make sure we hold 50% of this move. And like I said, give me a red candle, and then let's go for that staircase pattern on financials. All right. So what I did here, guys, I hope this kind of helps you guys. Give you guys the account size that I'm going to have that's going to match my buying power. My comfort level is that I'm looking for a great risk to reward with some bullish setups with some price action changes, meaning that it's no longer going to be bearish, but it's going to turn into bullishness. So I'm looking for the call side of things. We search the sectors, right? I chose the sector, so you can choose whatever sector you like. You can choose the semis, financials, retail, healthcare, oil, gold, whatever it is that you want, growth stocks. I chose mine. I chose financials. I think they're great. And I got a game plan. I identify the price action levels, and that's what I'm going to do tomorrow, this coming week. Okay, now those levels that I identified can be used as rejection levels. So if BAC, let's just say, for example, we can't go above this 32.65, feel free to take a put and write it down to the bottom of this 31.38, because we clearly have a base here. Look how amazing that base is. So on the break of this base here, or on the break of that below one, we're coming up, we're coming down, whichever one comes first. But I prefer the bullish side, so I'm going to go for the bullish side. Oops. All right, so that's kind of the breakdown on how to create a watch list, guys. Remember, keep it as simple as you can. I try not to go too crazy. I try not to look for a million things for me to answer and exit a position. I just simply want to know where it's going to change price action, if it's going to fit my account size, that I'm 100% comfortable with the type of strategy. Even in this bear market, I'm looking for a bullish play, guys. That's what I do on a consistent basis. Okay. I'm not a huge fan of the bear side, but I can definitely play it and scalp some SPX puts or some Google puts and make tons of money off of those, right? So anyways, I hope that kind of helps you. So now I'm just going to give you guys a few tickers that should be on your radar for the next week or so, right? First one is I'm going to give you guys Disney. This is a weekly level that kind of held, so I'm looking for a continuation over that 98. Keeping it very simple, it broke this channel, had a green day, so I'm hoping that we break over 98 to come and test that 100 level. Once we get over that 100 level, I think it's just going to be a little more bullish, and it's going to kind of stay down here. I hope we go sideways a bit before we even drive over that 100. I want a good strong move and a good base, a good pattern before we break that 100, okay? So that's Disney. The other one is going to be PayPal. PayPal has been struggling quite a bit, but I know SQ just got tons of aggressive volume past few days. So I want to see what PayPal does down here. So this green candle, as long as we can hold 77 right here and 78.30, this is going to be a long, or that 78.30 dip by right here 77 with your stop loss right below. Okay, very simple. Broke this nice little falling wedge thing, broke above. It had a gap and go on Friday, and it shows some strength. So let's see if it continues, right? The other one is DAL. This one is also going to be on a watch list. So let's look at it. We use that 30 level as a support, psychological number, nice little falling wedge as well. There's a lot of falling wedges on Friday, guys. And all we're looking for is the continuation. So the break above the high, that's where it's going to continue. So for this one, I'll just use 31 into 32.60, 33. And once we hit that 33, we're looking for 36. Okay. So airlines, if you guys don't know, please check out all the airlines. They're amazing. Okay. The next one I wanted you guys to look at is Shop. This one has a stock split. So be excited for that because it's going to be a lot cheaper for you guys to trade, right? So hopefully it comes down to my level because I have a $500 account and Shop contracts become super cheap, as you guys all know that they're very expensive. I don't know what it's going to look like, guys. Very simple. Same thing happened with Apple and Amazon. They both dropped the following week after that split. Sorry, no, the next day after the split, like that whole week was red and the next few weeks were red for Apple and Amazon, right? Can we expect the same thing for Shop? Can we expect a nice pump at the open? Everybody trying to get in because of the hype, because of the split, because of it's so cheap. And then after that, once it has like 2 green days, it'll freaking just drop and then try to find a structure. But we'll get to that in the next couple of days. Maybe I'll make a video checking out Shop, but be excited. It's going to be super cheap again, right? The other one is going to be Meta, part of the FANG stocks, which no longer is FANG. It's actually MANG, M-A-A-N-G. Used to be FANG. So thank Zuckerberg for that stuff, right? This one actually, again, had a nice channel coming down and it finally broke above that 160 and it ran super heavy, so all the way to 170. So we legit went from 158 to 170. So I'm definitely expecting a nice red day for this to pull back. I think the good dip buy will be right here at this 164 to 162. Okay, this is where I want to capture my dip. But this is going to be for my regular account, not my 500 account, right? So I want to try to capture a dip right here. So make sure you guys set these levels. This is where you guys are going to see me probably post a call out on this or something, call it a dip buy with your stop loss literally like right below. Okay, it just makes sense. I think this one has a lot of great reward to the upside and small risk. In general, I think Meta is doing a lot of great things moving forward, and people were scared to buy it because of what happened to Snap, saying that they lied about some revenue numbers, social media platforms, and this is social media, so it's probably that's why it's been getting affected that bad. But overall, Meta as a company is doing a lot of innovation that's bringing forth revenue. The example is the metaverse. That's a big thing now, and I'm almost positive that it brought a lot of revenue into the company. What they have in store for the future, I don't know. Who knows? Maybe they go to zero. I mean, I don't know. It's the social media, right? It may become like Snap and Twitter, where they're worth only like $10. But either way, Meta is a big company, and they are doing a lot of things. So I'm just gonna look for continuation for Meta. It's if it breaks over 172, a lot of people are gonna try to go long on here. So if it does, they're gonna look for this gap fill. Okay, so be aware that there is a little gap fill all the way to that 175. So you can definitely capture a nice little move right there, and trading Meta is pretty nice. So look for 180, 185, 190, and just watch every whole number for this. It's kind of like what I'm getting. Okay. But yeah, guys, I think that's it for now. Be aware that this market is still a little bit bearish. Another thing though, we did have I'm going to show you guys on the weekly. We did have a bearish market based on percentage. Okay. That came in here. Okay, so I'm just going to give you the area where the market based on percentage went bearish. But like I've said before, we've been bearish since the beginning of the year. So bearish market meant that we're below a certain percentage. I think it was 20%, okay, or 25, whatever it is. From below this 38 and 39, that's where the news media and the articles are coming out that we're in a bearish market. What does it mean to be in a bearish market? It means that a lot of people are trading puts. Stocks are coming down. The trends are down, and that's what it is. The volatility is high, and that's a bearish market. What happened on Friday is that we reclaimed with one candle, and we went above the bear market level. So you're going to see social media. So they're going to start saying that we reclaimed, we're no longer in a bear market, but we're in a bullish market back again. Whatever it is, guys, like they were late to the party because we've been downtrending since the beginning of the year. So I don't know why you're calling that a bearish market when in reality, since the beginning of the year, everybody's been playing puts. Okay, it's been bearish. So there's nothing new about what they are saying. What I want you guys to consider though is that specific level here. That specific level needs to hold in order for us to stay in a stable market or a bullish market, whatever they want to call it, whatever social media wants to do and call it to their advantage. That's the one that you pay attention to the most. Below 38, be aware. Above 39, okay? So we're going to do the 39. We're going to do the whole number. We're thinking short-term reversal, okay? Below 38, start thinking bearish and another leg down. Okay, that's it. Psychologically, that's what you want to think moving forward. Another thing is that the GDP that's going to entail recession, it's going to be on 7/13. So July 13th and just maybe like 2 to 3 weeks, the GDP is going to come out. But then again, when we get there, we'll get there and we'll talk about it then. Otherwise, what I want you guys to realize is that over the 39, look for a short-term bullish. Below 38, just look for continuation and another leg down. That's the perspective and the psychology behind this. Look for that, okay? Keep it very, very simple. Now, don't come in here thinking that we had a bullish week and that we're gonna go crazy bullish. Whatever happens, happens. I honestly prefer for us to go sideways before anything else. I legit would love to see just the market go sideways here and let that hold. Because what this looks like, it looks like a rounding bottom. Okay, this looks like a rounding bottom. That's what people are going to look. And then they're going to call that cup and handle. So they're going to look for this. They're going to look for this cup and handle thing here. And then they're going to look for that short-term bullish reversal. That's how it may play out. Okay, so don't expect a strong continuation right on at the open. Expect some nice red, nice pullback on Monday, and a cool off on Tuesday. So Wednesday, Thursday, Friday, we can just continue to hold and potentially break over that 39 and hold over 39, okay? So don't go 100% bullish just yet, guys. We are still in a bearish market. We are still downtrending. Everything about it says put still, but follow the trend. You're day traders. So don't worry about bag holding a position. Just get in and out. Follow your game plan. Make sure your account size is matching the ticker that you're in. And take it day by day. All right. So we'll do that. All right, very simple levels here. So I'm gonna leave you guys with that. I think that was more than enough. You guys have a great week. And if you guys need anything, please feel free to DM me. We are at Conservative Collectors. I am Chef. There's a couple other moderators that wouldn't mind helping you as well. So you guys stop in there. Jack, Troy, Jay the Trader, Gabe. Everybody's more than willing to help you guys as long as you guys come into the server and let us know if you guys need anything, right? Or just comment underneath the video and let us know. All right, so good luck, guys. Fed speak this week again. Look out for volatility and just trade safe, all right? Trade safe and be wise. I'll see you guys on the next one.